Pulver report. It is 9 o'clock. It's the 22nd of April. Let's get started. Let's talk some stocks, options, futures, forex, crypto. Let's see where the markets are at. Pretty busy week with earnings. 554 companies reporting this week with some notables. Let's chat about it. Let's go into earnings. Some notables. Before market open today, we have Verizon, Albertsons, Cleveland Cliffs aftermarket today. That's a steel company. Have some exposure on that. Be curious to see how General Motors does today. Lockheed Martin, Raytheon Technologies for some defense. Spotify Technologies will be pretty volatile. If you're looking for some movement this week, let me take a look. Use the highlighter tool. If we want some big volatility, Spotify is probably one of them. Tesla almost certainly is one of them. Boeing probably dealing with some volatility. And Meta. Google and Microsoft this week on Thursday after market close. Ultra will be one to watch for some dividend plays. See if there's any crazy volatility there, stability. Then we have some energy on Friday with ExxonMobil, Chevron, and Phillips 66. So watching quite a few. I'll keep my eye on maybe 10 to 15 this week, possibly position for a couple of them. Last week was profitable on Netflix, profitable on Taiwan Semiconductors, a pretty inexpensive way to play them. And we'll be watching these kind of notables for the week. So that'll be some earnings. We'll talk about those in Equities on Demand. Let me bring up the chat. Say good morning to everybody. Good morning, Chris. Good morning, Ann. Good morning, David. Good morning. And happy Monday. Nice to see everybody. We are looking at pre-market up a little bit on the SPY levels that I'm watching. So we've had a pretty big sell-off. I mean, the markets were down. The Dow was flat last week at 0.01% to the positive side, barely clinging to a green candle somehow. And then the S&P and the Russell and the NASDAQ were all down a reasonable amount. We had like a 3% sell-off in the SPY. I'm pretty sure the S&P, I'm pretty sure we had like a 4 to 5% sell-off in the NASDAQ and like 6 to 7% in the Russell. I can fact check that, make sure I'm not just making that stuff up. Let's go right here for the recap. Overall, yep, let's do this. Overall, S&P last week was down 3.05%, NASDAQ down 5.52%, Russell down 2.77%, Dow clinging to that break even, 0.01% to the upside. So not a great week for the stock market. But taking a look at the previous all-time highs back in 2021, 2022, if that's where the market is going to be heading this week, the pressure is continuing to mount. Geopolitical tensions rise. There's retaliation going on in the Middle East right now. So let's just talk technicals for a moment. I discussed this a little bit last week. I think this is a pretty, easy to see wave structure. If this is wave 2, 3, 4, and 5, I would expect to see that price can come back into this area here or this area here with some type of high, low, lower high, lower low. Now that would be extremely obedient, right? Technically obedient. If the market does that, great. That means that we may have an up week for the market, but if it's not a higher high, then it's what's kind of called the dead cat bounce. And here we are with lower high to lower low coming soon. Now, with the amount of fear out there, the amount of uncertainty, the pricing we've seen just shedding some of these gains for the year, if we just have it continue to drift and drip lower, where the pressure just mounts every single day, where it gaps up and fades down, gaps up, fades down, fresh lows, then I'm looking at all-time highs. Previous levels there would be about an 8 to 9% correction. And looking at just some simple round numbers, if we get to 10%, do we get a 10% dip Is the market interested in finding some lows there with companies, 554 companies, including some of the large mega cap techs like your Mag 7s? If Meta and Google and Microsoft, if they have pretty big earnings reports and they beat on both sides, it could help give a boost to the markets this week. So wouldn't be surprising if their earnings are steady, as the market would expect. I mean, last week Netflix was okay, but they also reported that they don't want to show subscriber growth anymore. So we had beat on both sides with earnings per share and revenue. But when they said, yeah, we're going to stop reporting subscriber growth, then the market's like, well, that's stupid. So anyway, Netflix got punished pretty hard last week with a move from 608 all the way down to 554. And we did expect about a $60 move. That's what we calculated in equities on demand, and it was right on it. So it would have been nice to play that. We did. We took an in the money. This is the trade that we took right here. So we did an in the money credit spread right here. So we did the 565 by 570. Grab some credit on that one. That was a good play. Hypothetically, if we did this would have paid. So you can see here expected, $60 to $70. If you did the 610 by 5 or 610 by 500, pay $52 for it. The market did offer up a little bit more than that. So that would have been a 610, and we're trading at last week's close was 555. So you're looking at 610 minus 555. You're looking at a $55 move. You're not getting a lot out of it, but put $5,000 on the line and make $250. Not great, but it still worked. So we just didn't have a huge, $80, $90, $100 move like we did here. This was $491, jumps up to $539, rips up here to $562. That's a $70 move just within a couple of days. That stretches up even further. That's $580 from a $485, $490 previous close. This was the big earnings gaps we had earlier. So, it took a few extra days, but this thing surged about $100. And last week we just had the drop for about 50 to 55. So anyway, these trades are done. Let's chat SPY. 495 closed last week, 498 current market. Futures are up a little bit. Gold and silver have dropped a ton. They're looking violent to the downside for the last day's trading. If we go to the Dow Jones, Dow hung in there with some stability right around that 30% retracement level. I do have a trade on the Dow this week with a 370. This is a long put butterfly. It's a broken wing butterfly. So if price stays where it is, price goes higher, price even drifts a little bit lower into my 370 strikes, that's going to be my pin price level. But again, similar technicals, where if this was wave 4 to wave 5, previous level here, high, low, lower high, lower low, something like that. I'm looking for symmetry. Again, this may not be the forex market. It may not be technically as cooperative, but doesn't mean that we can't have at least a wave structure play out in the markets. So if it's an up week, I think the up week still struggles and fails to take out any highs. I could be wrong, of course, but if it's high, low, lower high, then I'm still looking for another chunk lower. That being said, if we were to continue to push a little bit lower, finding this all-time high, previous resistance becoming support, or finding this high from 2023, somewhere in that 50 to 60% fib zone, I would directionally be looking a little bit more aggressive for a short-term bounce. And that short-term bounce might be, pretty decent. I mean, if we have like a 5% broad market move, I mean, that could be green across the board. If you look at what last week's performance looked like, it was pretty awful, right? Semiconductors were down, major large cap tech, Mag 7 were down, Amazon had a pullback for the first time in a while as it was just drifting up to the 180s. Tesla's been down and beat down badly, down 14% last week. You see a lot of red on the board. And right now I'm just curious, I mean, broader market sense, if we go to FinViz, oops, let me go here. Based on the close last week, fudge, it won't give me the info. Let's go. I wanted to get a summary of last week's performance. Let me see if I can grab that here. Screener, home, heat map. if it would give me 1 week performance. No, I was going to look to see if we had how many companies were below the 50 moving average as well as below the SMA 200. So the 250 moving average, if you have your proverbial death cross, shows right here 7,100 companies below the 50, about 44% of the companies below the 200. So, short term, we have some pullbacks coming. Support would be offered up if a lot of technicals are testing that 200 EMA or 200 SMA to provide some support if that's the case. I was looking to see if we had a bull bear report, which I don't see. I'm curious if the CNN greed and fear index has switched over to fear. Here we are. So I got it again. We were in extreme greed probably a month ago. That has quickly shifted into fear, and I'm always interested to see, do we shift into extreme fear, because then I'll start to look for some technical lineups to possibly get long, because usually we have those swings where when the market's extremely greedy, there tends to be pullbacks. When the market's extremely fearful, there tends to be bounces, right? So, fear is driving the markets right now. Uncertainty is driving the markets right now. We are seeing, the Fed language changing quite a bit. U.S. 10-year yields continue to push higher, as do 2 years. So the 2 years are up 4.96, 10-year up 4.65. We're still in an inverted yield curve by about 0.3%. The big level here would be 5% to watch in the 10-year. That means bonds are pushing lower. Oil pulling back. Okay, again, fairly violent and pretty volatile. Gold and silver and oil. We're looking at a correction on oil right in here around 7.5%, almost 8% from the previous highs. I still think oil's well supported around the $77 to $76 area. So I still like long, but I mean, when it's dropping this aggressively, it doesn't really make you want to catch a falling knife. So I'd try to position kind of outside here for oil. I actually might look at an oil futures trade today, this week, see if it would stay somewhere here about around like $77. Gold had a big drop from our daily chart. That's a big rip to the downside, again, off the all-time highs. I still think gold is postured pretty solid to the upside, but we've had about a 4% correction on gold. And do we have something really simple like a pullback slash buy the dip? So if we looked at a trend line like this on gold, do we start to see that gold pulls back? This halfway point was around 2270. We have a previous resistance level around 2200. So does gold, does it pull back in kind of a bull flag type sense where it just is, it's not aggressively bearish? Or do we have this big snap up, this big snap down? You just got to kind of catch it at your level and see if we're going to push to all-time highs once again and finish that full measured move at 2470, which would be the 2-year range. That's the full measure move around 2470. So I like silver a little bit more. We've talked about that for a while. Technically speaking, I think the measurement on silver is a little bit easier to stomach as opposed to trading all-time highs on gold, especially when there's going to be some high volatility. But my gold box right here, this is just a breakout from the range. Measure the move to symmetry, measure the move from the breakout here with the previous highs in 2020 and 2022. That pushes us up towards 2,500 actually, now that I see that. So, destination would be take the range or project the low to high symmetry. And between this 2470 and 2525, those two levels would be where I'd kind of expect my full measure move on gold to be fulfilled. Silver, a little bit better as far as the measurement goes. Take this low from COVID, low to high swing, measure symmetry projected out. That's around $35.60. I'm still long at 20, and I'm looking to see if this will stay up towards $30 to $35 for my first target. And then if we have a 5-wave move, then that 5-wave move would be measured up here towards 48, which would bring silver all the way up into highs we haven't seen since 2011. So we shall see, but that's silver. Ron, good morning. Herschel, good morning. Gary, Catherine, Giza, Trish, Jose, nice to see everybody. Good morning again. All right. So oil, gold, silver. Let's go dollar index and some currencies. S&P 500, what to expect this week. Looking at the previous all-time highs, looking to see if we pull back into the October low from last year into this recent all-time high. Do we pull back into some fib levels that offer up some technical support? Dollar index. Here's the dollar index here on the daily time frame. I still think it's offering up some buying. We're in the middle of a pre-summer push going into April. If April and May continue this way, okay, April and May continue this way, dollar gets stronger. Do we end up taking out these highs in the 107 level? Possibly. If the bulls score a point here, this will be interesting. If the bulls score a point above this high, possibly drift up into this 108 zone, 108 to 109, find this pocket on the dollar. I don't want to call the top on the dollar, but we were very patient for over a month as this finally, went sideways. We waited, and then we saw confirmation finally break. So maybe the same type of thing. If we hit highs, stall a little bit here, create some indecision, rather than forcing trades, we can just get confirmation to sell, and there's plenty of downside potential on the dollar crosses. So I think the surprising move for me on the dollar would be if we came all the way back up here. So if the dollar, blows through this kind of broadening pattern and just gets higher, all the way up into this zone and then continues higher, that would be, I'm going to say I don't expect that to happen. Just based on the structure, based on this, high low. I think all the market's going to need a cent for is if and when the Fed will cut, and then we're going to start seeing that 6 to 8 month forward pricing. Which would possibly price in a weaker dollar. I just think right now, a lot of the bad stuff is getting priced in, right? We have tension in the Middle East. It continues to rise. I mean, it seems like it's getting worse and worse and more noisy. We have, earnings that may or may not save the market right now because combination of interest rates being higher for longer, probably not good for tech, probably not good for growth, probably not good for small caps. And so a lot of this negative stuff is being priced in pretty aggressively. And again, this might be, the market kind of sheds and prices it in, and then the market finds some stability, which is what I'm looking for. So that comes at some certain technical levels, and we'll be paying very close attention to all that stuff. Okay. Morning, Joe. Dana, good morning. Steve, good morning. All right. So that's dollar index. Anything else that I have on the major indexes? SPY. Looking at previous all-time highs, I'm positioned on the SPX this week for a trade around 48.10. So this is another broken wing butterfly for me, 48.10. We'd have to drop another 3.23% to threaten my position. I'd like to kind of watch, intraday and see if I can carve out maybe 2-3 trades on the SPX this week, get a feel for it. Gamma levels that I see today, if I float this down here, this is pre-market, so big contract levels and opening or pre-market gamma levels at 490. Let's see if we have any major expirations for this week. Let's go expiration on the 26th. Okay, so we're through the big April expiration. I had a ton of trades clear up last week for some 30 to 45 day cycle profits, which was nice. Here we are looking at the 26th. Oops. Looking at the 26th, so out to this Friday, and we see, looks like we have way more put interest than we do call interest. But those levels, interesting. So again, these aren't massive levels, but that seems to be a lot of contracts at the 450 level, a lot of contracts at the 425. Again, most options expire worthless, so we have to realize that if you're wanting to have the higher probability, you sell options instead of buy options. But still, I'm just curious where the big open interest levels are sitting. 500 would be a retest, but still a failed high, right? We were on the SPY, we had previous highs. That's 52 and change on the SPX, which means we're at 520 and change. That high was 522, 523 on the SPY. So anyway, keep it simple. Is it a high, low, lower high, lower low, which this week could be that start to a lower high, as we possibly, say, okay, market's had a tough week, had a tough go. The bear pressure's been on. We pulled back to that 23% level. Does the market respond to that a little bit and then head back lower towards the 30 to 38%? And then technically speaking, between that 38 and 50, I'm looking for the market to see if we can carve out some type of low. Okay. The Gary Network. Nope. Haven't heard of that. Bitcoin. I haven't talked about Bitcoin yet. We had the halving this weekend. Price is at 66. I'm going to say I'm giving Bitcoin a lot of credit for hanging in there, for having quite the sell-off that we saw on the NASDAQ. I mean, we're off the highs around 8%, I believe. Yeah, around 8.19% from the high to low. Just a little bit shy of that 8% level with current pre-market. We're up about $3 pre-market because the futures is kind of showing some green today, but just under 8%. So, I mean, I think Bitcoin percentage-wise is probably similar to that, but it looks to be hanging in there a little bit better than most, considering we've had some deep, deep red and some straight direction. So, yes, that's a 19% correction from all-time highs to the previous dip that we saw last week. After the halving event occurs, I'm still watching my chart alarm, 60,000, 55,000, and then of course up here at the all-time highs at 74. If we break 74K, let's cheer it on to 100K. If we pull back any deeper, there's still some levels here around that 55 to 50,000 pocket. I'm pretty interested in buying some dips in there and then going out longer term, 6 months, 12 months, just looking to hold. If we have a chance to buy here at 50K and the market heads back up to highs again, that's a 40% rally. So, I mean, if I'm struggling to look for some upside potential, that's a pretty good measure move to me. If I'm looking for some gain potential, same thing on silver. If silver gets to my measured moves from current prices, even with this pullback, I'm still looking for silver, even with current levels, for about a 30% move into my first target. We get to my full measured move, it's even better. Here would be silver's upside towards about a 75% upside, which is big. And I don't have a timeline. This could take 12 to 24 months. It could take longer than that. It could take shorter than that. But that's where if I'm putting a price on this, I'm not putting a timeline. So I hope it happens quickly. But obviously price has to figure out what it's doing in the near term. So I think we have a little bit of noise, some high volatility after this breakout about 26. And we'll see if this 26 and change level holds. And check this out. We have resistance here. I'm not going to lie. I would hate to see if silver did this. If silver hits this high and comes all the way back in this yellow zone, I will not be happy with that. So I do want to see if we end up, getting this chart alarm activated around $30. If we can make a move into some fresh highs, I'm hoping that happens. So that's what I'll be watching. All right, we're about 6 minutes away from opening bell. Schedule for this morning. So I think I'm going to be on with the A1 trading team this morning around 10 a.m. Yep. So I'll be on at 10 o'clock. If you'd like to come back and join me on the stream here around 10 a.m. Eastern time, I'll be with Nick and Frank and possibly James and team. But that'll be 10 o'clock Eastern time. I'll just stream it on my channel. And that'll be another little session to kind of discuss recap, getting some trades, opening bells in a few minutes. Trades I'm looking at, I'm going to look at something in gold futures this morning, silver futures this morning, oil futures this morning. I'll be looking at the SPX today. I do have some positions already set up. So if I go into my positions, I did this on the NDX last week. So portfolio is a lot more concentrated now, which I'm super happy about. NDX right here. Let's see. So 16,600 is my big level on the NDX. That's the NASDAQ. That's a broken wing butterfly, so I'll be keeping a close eye on that. So NDX, not NDQ, NDX. So NASDAQ futures, 16.6. I have a broken wing right there. Again, price, if it just drops straight down, then my position could certainly be threatened. This is a Friday expiration. That would be another, 2.65%, which NASDAQ is certainly capable of that. But because we have large mega cap tech, are the earnings prints going to be good enough to possibly offer up a little bit of a resiliency this week? If so, that should be profit on the NASDAQ. If the broader market's lifted, then, probably profits across the board for me on the Dow, the NASDAQ, and the SPX. So I don't think I have another trade running on the Dow. That was a 370, 419 expiration. That was last week for full profit. I could look at the same thing. Let's see. I could probably do that. I could probably do another trade. Let me see what that looks like. So 370, if I did another broken wing there. Let me check. I don't know if prices are going to be accurate. They will be in the next 4 minutes, but let me see what the Dow looks like. Trade out to the 26. Can I do a 370? That's a 9 delta. I like it to be a little bit higher delta for some credit, but 370 is a good level. Skip strike there, 6 cents credit. I don't love that trade. It's a high probability trade. Could probably go. Yeah, it's a good trade. It wouldn't cost a lot if I wanted to increase contracts here. 6 cents plus a butterfly, paying some contracts. What's my deal? So if I'm 6 cents a contract, 80 cents there. I'm going to make about $4.80 per contract. So I'd have to get something filled like that, where I take, essentially five. That's a lot of contracts there, right? So 10, 15, 20 contracts. What's that going to cost me? So 80 cents, 20 contracts, and it cost me $16. And if I made 6 times 5, or is that 10? 2? No, that's 5. Jeez, oh Pete's, man. I make $30. That's just, nah, no thanks. I could get this into a slightly more reasonable credit right there. Only 5 cents. Hang on. I'm just, never mind. Let's get to opening bell and see if I can get an update in this one. But otherwise, I might just stick to my NASDAQ, NDX, and my SPX, and then I might look at the Russell this morning. Russell doesn't look nearly as good as far as, technical levels. Small cap could be pulling back more. So if we go to the index here, put a fib on, we're at 1947. I think we're in double digits on the corrective side. We've dropped about 9%. So the Russell and the NASDAQ, right in the 8 to 9% correction zone. So it's a little steeper. I could just put it on based on a delta, but I'd like to see a better technical spot. 1891's not bad. Not bad. Let me see, 1891. Russell. 1891. If I went to oil and looked at oil futures, we can take a look at that as well. Oil, to me, as long as we're above, 77.50. Okay, so gold futures, silver futures, oil futures, Russell. I'm already positioned on the NDX, already positioned the SPX, and earnings this week. So probably a combination of throw out some earnings plays, see if we have some good volatility on. I'm thinking Tesla. If we, and I probably won't go out to just the 26th. If I do a Tesla earnings play, I'm probably going out to May 3rd. If I do an earnings play on Meta and Google or Microsoft, probably the same thing. Energy wise, I might take a look at those. It just depends on if I'm selling options. Opening bell. If I'm selling options, then I want to try to collect, a reasonable amount of credit and have a high probability trade. If I'm buying options, I need to basically buy volatility. And I do think the stocks I mentioned, Tesla, Microsoft, Alphabet, Meta, we could see some big ones. And then energy companies are hit and miss. I've traded these before where, Exxon and Chevron were break evens, but Phillips 66 was a huge win. So, I mean, as long as you're not losing on all of them, there's risk in all these trades, but they could be a little bit more affordable for calculated movement and volatility. So I'll look at their projected moves and see what we have, see what the previous earnings have printed. If they have, let's say, the last 10 earnings prints, if they've had 6 or 7 that have been easy to trade, they've hit the expected moves, then great. If we hit the expected moves with a high probability, then we'll trade those. If we don't, then it's easy to turn those down, and I'm just going to debate whether I want to sell options or buy options for those earnings plays. All right, it's opening bell. We gapped up on the SPY by a couple of bucks, 495 or so, all the way up to 497 and change. I think that move probably gets faded a little bit. That's about a $2. Got about a $2.70 move on the SPY. Let me check that percentage. So 2.70 divided by 495. That's about a 0.5% move. So let me go into some statistics here. Let's go probabilities. Let's find some data on the SPY. If I go into gap fill, let's go percentage and size. So it did 0.5, which is right here. So we gapped higher. Okay, we gapped higher. 59% for the last, let's go 5 years. Well, let's go year to date first. So we gapped higher. Let me see if I can go by weekday. So if we gap up on a Monday, there's about a 63% chance that the gap's going to get filled. So if anybody's interested in filling the gap back to 495, that's a pretty good probability at this time. If we go for the last 5 years, it's about a 50-50 chance on a Monday that the gap fills. But I'm going year to date. Mondays have been a little bit more volatile. We'll see. Like I said, gamma levels opening bell. 490 is my big strike today. That'd be a big sell-off for a Monday, though. Although last Monday was a massive sell-off. We had like a 110, 120 point move on the SPX last week. So that would be roughly a $10 to $11 move on the SPY. So I don't think Mondays are usually that volatile, historically speaking. So, but anyway, looking for some price gaps. Look at the size of that price gap here. Based on just the size at 0.5, we're looking at about a 62% chance that the gap is not filled. So anyway, couple of trade options. If I wanted to float out like a 493.50, if we don't fill the gap today and we stay, slightly up on the day or stay range bound from the close at 495, it's already up around $3 or $4, which means my SPX is sitting up around 20 to 30 points already. Average point days around 60 points. So I'm looking at the SPX floating this out here. So we closed around 49.67. We've gapped up to around 48 or 49.87. So 67 to 87. It's about a 20-point gap. We're up to 92 right now, getting up towards 30 points on the day. Market, you can see here with the call volume sentiment, 83 to 0. It's just all calls right now. And let's see here. I think what I'll do is this. If the market makes, for a Monday especially, from a 49, we'll say 49.65 to a 49.95, that's already a 30-point move. If we were to stretch, let's say 50 to 60 points on the day, 50 to 60 points on the day, two things I might look at is, one thing would be going out another maybe 30 points. So if we have a 30 to 60 point move, if I stretch another 30 to make this what would require a 90-point move, I could do a sell option up here and try to collect some credit and see if my probability is that the market's not going to go like 1.5 standard deviation today. If we quickly come back down and fill the gap, okay, so we had a 30-point gap up. So we have a 30-point gap up. Let's say the gap gets filled. Well, if the market makes some fresh lows, then I mean, I feel like I kind of missed the opportunity on the upside because I'd already be 30 to 60 points away from that. But if we get, 30 points here, 60 points here, I could possibly look at like an 80 to 90 point move, do the same thing, collect some credit on the downside. So as long as price stays, if I put in prices down here, price stays above it. Put in prices, up here, price stays below it. So not going to position for it right now. I'm just going to kind of get a feel for the day. right? Arthur, gold. Yeah, we did gold. Gold's pulled back quite a bit. And by the way, if anybody has any questions on this, this is in my Discord channel. If you're wondering, I like that software, I like that dashboard. What is this? This is Edgeful. I use this every day along with my dynamic trends, and it has everything I could possibly need and want for some probabilities on what I trade. If I'm trading, especially positioning for options on the SPY, what's the probability of this trade working? Right? We trade deltas, we trade options and SPYs all the time, and SPY translates to SPX. So for me, this is a really easy way to get a game plan for what price does, certain volume expectations for the day. We look at certain indicators. You've got average true range, which I use quite a bit. This is another reason now I'd expect Mondays to be reasonable if I went year to date or 5 years out. Standard move. So right now we're looking at about a $5.85 ATR. That's a running like 13-day or that's a 15-day calculation. And then by weekday, what I like about Mondays, probability wise, is Mondays should respect the range. So yes, our range is about 585, which means if we get up to, this would be about a $5.5 to $6 move. If we respect that range 73% of the time, and we have a $3, $4, $5 move right out of the gates, I don't think we're necessarily on average probability wise, we're not supposed to stretch over 6. So again, positioning for options intraday, it's pretty easy to get a decent 0 DTE trade on a Monday with a little bit of movement. So 73% of the time the market respects the day's ATR. That's a pretty high probability. Right now, that's for the last 5 years. If we go by weekday, this is what I kind of like here. What days are better to trade? Sell options ranges. Monday, Tuesday typically are the respectable range trades. Wednesday, Thursday, Friday, you start to see that still slightly respecting the range. But then we go to volume. Take a look at volume here. Look at volume by weekday. Monday, Tuesday, Wednesday, Thursday, Friday. If you're looking for directional plays, Wednesday, Thursday, Friday, typically the market likes finding some direction. So if I wanted to sell options, I like the Friday to Monday trade. I like the Monday trade as is or the Monday Tuesday trade. Wednesday, Thursday, Friday, I'm looking to follow directions if I'm trading single day expirations or only a couple days out. Plus we have earnings this week, which should be a decent catalyst to get the market moving and shaking. Okay. All right. So gold, I'll chat on that for Arthur, and then I'll take a little breather. We'll be back at the top of the hour. I'll join Nick and the team with A1 Trading. So gold's just having a pullback. I think gold is still likely going to maintain some bid. So it's interesting that gold is this anti-dollar. It's an inflation play. It's been ripping to the upside. Gold also, it seemed that gold ripped not because of risk off trading, but risk on trading. And the reason gold is dropping right now is because of risk off trading. So I guess there's a balance between risk off, risk on with gold, as well as inflation. And I think that the risk on and the risk appetite we saw early in the year, plus the the market's kind of anticipating, okay, well, inflation numbers coming in quite sticky or higher, and gold was a nice little surge on top of that. But look, I think gold is still a good trade. I just wouldn't want to be buying at the highs. That's part of the reason I shifted a lot of my trade. Once I took profit here at my halfway point at 22.75, I started focusing on silver more so than gold. I think now the trade to me technically is better on silver. I think it's easier to measure. Not that gold can't continue to push to all-time highs and keep going, but if we have a pullback, I think that I'm going to be looking to buy the dip. Let me change the color there. If we have a pullback, I'm looking to buy the dip and see if we can get either back to the highs again or get to my measure moves at 24.70 to 25.20. That is when I would be happy. That's a terrible smiley face. That's when I'd be happy as a gold trader to be like, okay, I measured my move, price did what I needed. I'm no longer interested in that trade. Outside of if I'm long to just have trailing stop losses, but I don't think gold's going parabolic. I think this is a calculated measure move. It's been a pretty straightforward run, and now the market's just finally checking that rally. As the market also checked the indexes and all their rallies, right? So there's just a little break in these one-sided moves that we've seen. I mean, heck, we looked at the major indexes for the US. They were up like 17 out of 20 weeks bullish. So yeah, the fact that we've had 2-3 weeks selling It's not a huge surprise. Okay. All right. Okay, I'll let you go. It's 9:40, and come back in 20 minutes. We'll take a little breather. I'll start the session back up. I'll just dual stream when I'm joining the A1 trading team at top of the hour, 10 o'clock. All right, everybody. Happy trading, lots of profits. I'll see you this week in the trading rooms, and I'll see you here in about 20 minutes.